In relation to the industrial real estate sector, manufacturing investments continue to sustain the economic growth of our country. Central bank data shows that foreign direct investments for the first 10 months of 2016 reached $6.2 billion, and the manufacturing sector was among the primary recipients of fresh investments. So we see more manufacturing investments flowing into the country over the medium term, mostly from our neighboring countries in Southeast Asia. Among these include Toyota and Mitsubishi's commitments to expand their assembly operations in the Philippines. More manufacturing investments resulted in greater demand for industrial space and facilities, and total investment pledges registered with the Philippine Economic Zone Authority for the first 9 months of 2016 reached $1.9 billion. The Cavite, Laguna, Batangas region recorded 28% of the total investment commitments from first to end of third quarter last year, and majority of the investments in the region are intended for manufacturing projects. A slight increase in industrial stock coupled with an uptick in demand led to a decline in the overall vacancy of the region's industrial stock from 10.1% in the first half of 2016 to 9.5% at the end of 2016, resulting to industrial land lease rates at 60 pesos per square meter per month on an average and 230 pesos per square meter per month for standard factory buildings. The decline in vacancy is not surprising as major manufacturing investors continue to gravitate towards the Cavite, Laguna, Batangas, which we call our Region 4 area, due to its proximity to the country's capital, availability of adequately skilled labor force, and relatively cheaper wages, plus finally the improving infrastructure. Crucial in funneling more manufacturing investments to the Cavite, Laguna, and Batangas corridor is the planned revival of a rail cargo between Manila Port and an inland container terminal facility in Laguna. Aside from the Southern Luzon, interest in other viable locations for industrial park development such as Central Luzon has also been increasing. There are dozens of local and foreign manufacturers, most of these are Japanese, that expressed interest to put up facilities in Pampanga such as Clark Queen City and Alvera Industrial Park in Porac. However, Region 4 is rapidly urbanizing and we are seeing movements to other regions as locators start looking at other viable industrial locations across the country such as Region 3's Bataan, Bulacan, Tarlac, and Pangasinan provinces. We believe that developers should take advantage of this model, which is particularly important for cost-conscious manufacturers that look for lower industrial rates and affordable labor pool.